Alright, so I'm back today with another trade recap, and I actually am recording this the day after the trade. So today's currently Thursday, August 7th, but today I'm going to be going over my trades from August 6th. So I ended up losing two trades for a total of $450. The extra $2 is probably like commissions and fees or whatever, but yeah, I ended up losing two trades. And also, this is probably going to be my last time showing my stats every day. I'm probably just going to show them at the end of the week for like a weekly recap, because I've noticed that one thing, and also this is something that a lot of people within the trading space say as well. If you're not really actively thinking about your unrealized and realized profit and loss, your balance, your loss limit, your drawdown, whatever it is, it doesn't affect you as much. When you know that you're losing money or whatever, you trade differently. When you know that you have a certain amount of money left, you trade differently. When you know that you're pretty close to your profit goal, you're going to trade differently. So all these things are things that can impact your psychology while you're trading. So I actually found a way to be able to hide these. If you go into settings and privacy, you can turn all of these on to hide your balance, your loss limit, all that stuff. So I literally cannot see anything right now. Also, I'm going to go over my risks management settings because that's pretty important. And that's the reason why I only lost 450 today. So anytime I enter into a position, it automatically places stop losses and take profits for me at $300 risk and $600 profit. So 1 and 2 RR. My first trade, obviously, I'm risking $300. If I lose that, I will look for opportunities to trade again during another macro, like 10:45 to 11:15 or 11:45 to 12:15. If I do find a setup and if I do end up trading, I'll de-risk by 50%. So I'll only risk $150. That's how I lost $450 yesterday. I ended up losing both my trades. But I also have a personal daily loss limit on my accounts for $450. So if I lose both my trades, or if I lose a certain amount of money, once I hit $450 loss for the day, it automatically liquidates and blocks my account, which is perfect. So you really should go into your settings for your accounts, especially if you're on Top Step, and just look at the risk settings. Adjust them towards your strategy, and make sure that you have some, settings in place to help you protect your account. So I ended up losing all of this within the span of 4 minutes, actually. Average trade duration was 1 minute 50 seconds. I took two trades. The first one was 40 seconds. Legit 40 seconds. And the second one was 3 minutes, whatever. So, rough day, but, I'm going to keep a clear head. I'm going to keep a clear mindset coming into today. Gotta make sure I don't do anything dumb and just trade like I normally would. So the reason why I took those trades, we were currently trading into this bullish gap right over here. I'm not going to draw anything for now because I have some things hidden over here that I'm going to get into. I have my executions up here, so I'm just hiding them right now on the 4 hour so I can show you guys where we were in price. But we were just at the 23,169 range when market opened. So we were currently trading into this bullish imbalance. What I'm expecting is for price to come up out of this bullish imbalance. And what do we have right above? A bearish imbalance. So I'm thinking price is going to start here, go up into this into this bearish imbalance, and come back down to target this bullish imbalance that's still unmitigated, and then maybe come back up. However, we have been getting a lot of inverse fair value gaps lately. On the higher time frames, you really want to respect imbalances and assume that they're going to be respected, but they ended up getting inversed. So on Tuesday, we inversed fair value gaps from Monday, and on Wednesday, yesterday, we inversed fair value gaps from Tuesday. So pretty tough to be able to tell what the market's going to do, but hey, that's all part of the game. So again, I was expecting price to come back up into this bearish gap. I was looking for shorts because we were inside of this bearish gap. And then I was looking for price to come back down, balance this imbalance out. Fill this imbalance and then come back up. But that obviously did not happen. On the 15-minute time frame, let me go to yesterday, right on here. Yes. Right around here. So we were tapped into this bearish 15-minute fair value gap when price was, when I took my trade. So again, I'm looking for shorts on the 4 hour and the 15-minute time frame. So keep that in mind. But market's gonna do its own thing. So I'll scale down to the 1-minute time frame now, and I will turn the drawings on so you guys can see a little better. These two vertical lines just indicate where I end up taking my trades. And it's a bit hard to see actually, so let me turn these off real quick. So market open was right over here, and I'll actually turn on my indicator real quick. Alright, so coming into market open, which again is right over here. From Asia session, we put in a low. We came all the way up here. During London session, we retraced down, swept that low, and created another low, which actually kept going towards pre-market. Then during New York, we came up here, we took out this London low. And what am I expecting to get taken out? All this engineered sell-side liquidity that we put in on the way up, but also the London low, the pre-market low from around 650, and Asia lows, because again, I have a bearish bias for the day. We're trading out of a high time frame imbalance. We have an unmitigated bullish imbalance below us, a couple 100 points away. So I'm expecting a huge dump off to, again, fill that imbalance. So I'm looking for shorts on the day. So when we sweep external liquidity, I'm actively on the charts. I'm actively looking for opportunities to sell. This red line right here is the London high. As you can see, we swept it at 935. We retraced a little, and we came back up to sweep it again. So we swept internal liquidity that took out a major point of liquidity, which was the London high. We retraced and we came back and swept that internal liquidity. So right here, that's telling me that this is manipulation. What I'm looking for is a fair value gap, displacement, and for this order block to become a breaker block. So this is initially an order block. If price goes like this outside of the order block zone, taps back into it, and then puts in a new high, this is a valid bullish order block. However, price came outside of the order block and it closed below it. So it becomes a bullish breaker. What I would expect is price to tap back into this breaker block zone and then continue lower. I also see that we have a fair value gap that got inversed at the time. And the fair value gap that got inversed also created a new fair value gap on the way down. So we have an inverse fair value gap. We have a breaker block paired with the fair value gap. We have displacement past this swing low that manipulated to take out external liquidity. I had a limit order at the entry of this fair value gap, and I think I had stops at the current high, and I was targeting I think it was a 1 to 8. Honestly, I was just targeting this sell side liquidity down here, just a regular 1 to 8, and I got stopped out literally within 2 candles. I got wicked in pretty much at the close of this candle. Boom, boom, nuts. So, oh no, I think I might have been higher actually. So I think I got wicked on this candle. And then literally within 40 seconds, boom, I'm stopped out of my position and price goes back up. Only thing I would do differently is that if you notice, the bearish gap above us starts here. So we're not currently in this gap yet. And I knew that that was ultimately going to be one of the draws on liquidity before we came back down. So that's pretty much on me, honestly. We weren't even inside this bearish gap. The confluences were there, but the context wasn't. And that's why context on the higher time frames really, really matters. All right, and this was my second trade for the day. So remember, I de-risked by 50%. So I was only risking 4 contracts on this one. I'm going to zoom out. We can see that this is some external buy-side liquidity. I'll show you guys exactly why. On the way down, to make this huge swing, we put in this random high in the middle of nowhere. That is liquidity, because it needed to come back up to grab more momentum to make this huge swing downward. So coming into this trade, and keep in mind, I'm not able to see all these because we see this in hindsight, but in real time, what I'm seeing is these candles right over here. So we come up and we sweep that liquidity, while also taking out some buy side liquidity. We took out 1, 2 points of liquidity, while also sweeping external buy side liquidity. What am I looking for here? A change in market structure, a change in character, a change in state of delivery, and we get all of those things. So this swing high that manipulates, I'm looking for a candle closure below these. So this would be our change in state of delivery. Once this candle closed below, we also displaced with this candle out of the swing low. So this is displacement right here. We had our breaker block, and our breaker block was pretty big as well. That's one thing that I noticed with both of these trades that I missed. We had pretty big breaker blocks. So I'll keep that in mind moving forward. We had a breaker block, and although we did not have a fair value gap that came out of this, we were inversing this fair value gap on the way down to displace. So we had an inverse fair value gap plus a change in the state of delivery. We displaced, and we also had that paired with a breaker block. So in my head, I'm expecting price to, come up, sweep these external liquidity points, come back down and create our change in state of delivery and our displacement, come back up to retest the change in state of delivery and the breaker block, and then continue downwards. Did we get that? Obviously not. But in the moment, I had my I had my limit order right at the change in state of delivery. I, again, de-risked by 50%, but I was still able to have a stop loss at this swing high. And if we look to our left, I'm going to delete this London high. What do we have over here? More sell side liquidity. And then we had all of this sell side liquidity down here that still had never gotten swept. And we had, I think, Asia lows that still never got swept. So I'm looking for, we're inside of this bearish gap. We have so much liquidity that hasn't gotten swept. We have unfilled imbalances on the way down. Like, I'm really expecting price to just continue dumping downwards. But I just went for a calm 1 to 2. Or I think it must have been a 1.9 then. 1 to 1.9, because I was right at this target right here. I just wanted 44 points. And I got stopped out within a couple minutes on this one. So it is what it is. But these are pretty solid trades. Especially the second one, I went along with high time frame bias, my bias for the day. Obviously, you just cannot predict that high time frame imbalances are going to get inversed, because usually they get respected, and you have to treat them as though they are respected until that high time frame candle closes. So I'm not mad though. I mean, this is a part of the game. This is all part of psychology. Like, you're going to lose trades. Like I said before, it's never realistic to have 90% win rate. I had 90% win rate, and it got cooked. It is what it is. One thing I can do is, obviously learn from this, try to keep a clear mindset moving forward, and also just keep these in mind as well when I trade in the future, to make sure that my trades align with the current bias and the structure of the market. Which, in terms of the structure of the market, the latter point, I definitely did do that, because I looked for market structure shifts, changes in state of delivery, things that would indicate a clear reversal. Sweeps of external liquidity, all that stuff. But for the first trade, it didn't really align with high time frame imbalances, because we weren't trading inside of that yet. Second trade, I would honestly consider that probably a B plus or an A setup. So it is what it is. But just come back today, because today's Thursday now. But come back today with a clear mindset and just, focus on continuing to trade well, continuing to follow my rules, and continuing to stay disciplined on the charts. So I couldn't post this one yesterday because I was pretty busy yesterday. So I'm going to post it this morning and then try to maybe have another recap for you again this evening based on if I trade today. So we'll see. But thanks for watching, guys.